Hi everyone, hope you've all had a good Easter. I'm Callum and this is my YouTube channel, The DIY Investing Guy. I'm going to be sharing with you my investment journey. I'm also on Instagram, it's at The DIY Investing Guy, and there's a link to the Instagram page on the About section in this YouTube channel. If you're interested in investing and wish to start your own stock portfolio, there's a link to a free trade account in the About section of this YouTube channel also. And once you've signed up and got your account open and deposited your first bit of money, you'll get a free share worth between £300 and £200, but that's for UK residents only. I'm just going to put a disclaimer out there. I'm not a financial advisor. Anything I do in these portfolios, my own investment portfolios, buy, sell, hold, that's all down to me. That's my opinions on the company and based on my own research and my own understanding of the company. If you wish to invest in these companies, please do your own research and due diligence. Basically, this is going to be the first episode of my free trade portfolio. It's more of a preview episode because I started it earlier than I was anticipating. I was going to start it in April after I got paid and invested my first round of money. But I've decided to, well, what basically happened was Deliveroo IPO'd and it had a car crash IPO. I didn't subscribe to the IPO, but I thought it'd be a nice interesting way to start the portfolio was to buy into Deliveroo. And it hasn't delivered yet, obviously. It dropped about 33% after IPO in the first couple of hours of trading. It was down from, I think it opened at £3.90, it was down to about £2.80. So I brought in about that price and I used £50, and I was hoping it would go down a bit more and put a bit more money in. And basically I've only used money that was my own personal spending money, so I would have spent it anyway on a takeaway or, just generally just treat money really. So if it goes down, I'm not going to be too gutted about it. It's not like I've put £1,000 worth of my savings into this stock and it's dropped 33%, and I've bought it obviously at a cheap price. So what happened was it IPO'd and its valuation was about 7 billion on a £3.90 a share, and it crashed on the first day of trading. Now, I've got an article that I'll go through in a bit about that. And it lost £2 billion of its its market value in the first few hours of trading on the first day. So I thought I'll just have a little dabble. I brought £50 worth of shares. My exact holding, this is what I brought. There you go, see. Since it opened, well, it was available on free trade, so it's free trading. And I thought I'll buy into this at £2.80, and if it goes down a bit more, I'll buy a bit more. So I brought 17 shares at £2.89 a share. I'm currently £1.19 down on that. Well, that's fine. And I've just got a small holding. It started my portfolio, and I thought it'd be interesting. Started with Deliveroo. I do like the company, and I think it's got, it's backed by Amazon. It's got its good points. It's got its bearish points. It's got bull points. It's not profitable at the moment, but there's a lot of companies that weren't profitable when they IPO'd, and they've gone on to make billions and billions of pounds. So yeah, it wasn't on my watch list, but I've decided to invest in it anyway, and I'll probably build a position and do my own research and more research into it as my position gets larger over the year. I'm just going to go through the purpose of this portfolio, this free trade portfolio. It's not my main portfolio, and I'm only going to be investing between £100 and £400 a month, probably more, like closer to £100, whatever spare money I've got. And I'll be splitting that between 4 or 5 stocks. I'm going to keep it a concentrated portfolio because there's no point having £1,000 portfolio with 100 stocks in at £10 holding each. I don't think there's any point in that, following that many stocks. I'm going to try, because it's such a small portfolio, I'm going to try and keep it to 4 or 5 stocks and average into my positions over the course of 2021. Now, as I get bigger holdings into these companies, I will do more research into it. It sort of pushes me and forces me to research companies once I have a small holding in them, because any news articles, any annual reports, all this stuff you'll read and do your research and build a story around the company more if you own a piece of it, I think personally. But obviously I'm not owning massive amounts of it, but if I like the story and its fundamentals are good, I'll invest more money into it. over the course of 2021. And once I've built a position in my free trade portfolio, because obviously I can build a position and average into stocks with smaller lump sums of money because I'm not getting a trading charge. Whereas if I was doing it in my main portfolio, every time I put £50 I've put into Deliveroo would have cost me £15 stamp duty, trading costs and fees and stuff like that. So in free trade, it's really cost me nothing. So that's why I like to average into stocks on my free trade portfolio. And then obviously at the end of the tax year, I might bed and ice some of these and loss harvest some of these positions over into my stocks and shares also when they're a bigger position in my portfolio, and if I'm still like the story of the company. So that's basically the purpose of the free trade portfolio. My aim is to build positions in companies, high growth companies that I like and I understand. And that's my strategy basically. So I'm going to put between £100 to £400 a month into these companies and keep the portfolio concentrated to no more than 6 stocks, but between 4 and 6. And obviously this is just the first building blocks. I will be doing watchlist videos. I've already done a previous watchlist video on Moonpig, which I'll be opening a position in over the course of April. And that's basically the strategy behind the free trade portfolio. As you can see at the moment, obviously, you can see where I've put the £50 in, and then obviously I've invested into Deliveroo and it's gone up and down. It's not really done anything as such at the moment. That's my only investment at the moment. Here's the watch list so far I've got up. I haven't decided the 6 companies that I'll be investing in, but it could be a few of these. And Moonpig, I've done a watch list video on that, and I will be investing into Moonpig because I think it's a great company. I'm also going to be doing a watch list video on Alibaba and Beyond Meat over the next couple of weeks. And yeah, it's not really great loading, not great. And obviously the S&P 500 index, I've got that on there just to give me a sort of measure to see how I'm going against the S&P 500 index. But I haven't really got a criteria of what type of stock I'll be investing in. As long as I understand it, as long as it's got, I think it's a growth company where it's going to grow its revenues and its profits over time, I'll be investing in these companies. And there's basically the portfolio. It's not got much at the moment, but, I'm happy with the holding. I'm just going to go into the article. This is what happened with Deliveroo. Deliveroo is basically a delivery service on an app that you can, I've just downloaded the app, and it's a bit like Just Eat and Uber Eats, where you order your food, and you can order it from grocery shops and stuff now, and you order your takeaway food and it gets delivered to you. It's very much like the European delivery hero. As you can see, they're on bikes, and that's its business model. It's a delivery service through your phone, and you order your takeaways and you get them delivered to your door. Now here's the article. Disaster strikes as Deliveroo becomes the worst IPO in London's history. No, that's not. It's the worst ever IPO in terms of loot. IPOs, you normally buy an IPO and it normally has a boost on the first day, doesn't it? But not this one. And this is it. Short sellers. An unfortunate roadshow and terrible timing were blamed as Deliveroo lost more than a quarter of its value on its first day of trading, so it lost a quarter. It's become the world's worst IPO in London's history. They're close to 26% down, and it wiped $2 billion off its opening. That's why I've invested into it, because I thought it was a good company. I just thought it was a bit overvalued, and normally you have to wait 3 months or something to see where you're at. But I'm going to build a position into this over the next year, and I hope the price goes down because I see it as a big long-term holding. It's backed by Amazon. There are issues in terms of workers' rights and stuff like Uber's face, but it's not the same as taxi driving. It's a totally different sort of job, I think, personally. And you can do it as a side hustle, couldn't you? You could work your 9 to 5 and then do a couple of deliveries on an evening. You can sign up to Uber Eats, you can sign up to Just Eat. That's another bit. That's another bearish point. There is a lot of competition in this market, but there's still plenty of market share for people to be using these apps. So the 26th, the dramatic failure of London's biggest tech IPO is likely to damp hopes of the British government to attract other high growth companies to list in the UK. Now, I don't think that's the case. I just think it's the way the IPO was set up. And basically it was giving most of these rights to the founder and the owner. Most of the voting rights, the way it was structured, and not a lot of funds invested, so they were bearish on it. And I think that's just because their egos were bruised and they were a bit pissed off with not being able to, buy the class of share that they wanted. I don't think it will shut down the London IPO market, but it is what it is. And I think it's if you didn't subscribe to the IPO and put £1,000, £2,000 into it, I think as a retail investor, and you've brought in after the dip, I think you'll do well if you average your positioning over the course of 2021. And I don't think it's gonna, it's not a stock that you're gonna, it could take 10 years, it could take 20 years, but I think it will be quite a profitable stock. That's my opinion. Obviously it goes on about the advisors and bankers and, who's to blame. Short sellers for the opening plunge. There was a lot of short sellers in Tesla, and we've all seen that story of Tesla and how that's gone on, once it's made a profit. 3 hedge funds have gone actively short this morning. Well, we've seen what happens when hedge funds go short with companies like GameStop. And they're shorting positions on these companies, which, sometimes it's a bit unfair. And in the short term, they might be okay with a short, but I don't think long term this is going to be a good company. I think. You just think, why is Amazon backing it? And they've got plenty of money behind them if they're being backed by Amazon as well. And I'm sure they'll have a great business strategy. Others in the market raised questions about the company's roadshow and said Deliveroo priced its offerings badly, especially after encountering a rebellion from several large British fund managers. As I said earlier, it's the dual class share structure which has really dented it, because not institutional and fund managers haven't wanted to invest in it for this reason. I think they'll give all the bearish points in the Daily Mail and the Telegraph and all this stuff, but I think it's purely because they didn't like the structure of the shares. And that's why I think they didn't like the structure of the shares, and so that's why they've raised offers. And I think it was priced too highly at IPO, and it was bad timing. It's nobody's fault, but obviously we've had the market's been quite volatile since, I don't know, mid-February in all over the world, especially with tech stocks and stuff like that. So I think that's really affected the share price as well. And it's probably just not the best time to IPO a tech company, especially in the UK at that valuation, because obviously the market is volatile and IPOs are generally volatile anyway. I don't generally like to invest in IPOs myself. Obviously it's about their advisors and whether they advised them right on the IPO. Probably in hindsight they didn't advise them that well on the IPO and how to structure it. There's a lot of talk about the same thing. We were told throughout the institutional book was 4 or 5 times covered, but the maths of this seemed doubtful now, said another person close. This is basically saying that the people that were behind the IPO and advised on the IPO, so there was some big investors that were willing to invest in the company and put a bit large amount of money into it, but they wouldn't give the name of, and they're questioning whether this was true or not, or whether they actually had any big investors, backed by any big investors. And just talking about it being a roadshow, obviously our Wilshire gets outsized voting rights, and it meant that Deliveroo couldn't debut on the FTSE 100 index, depriving it of investment from passive tracking funds, basically index funds, and which triggered outrage from several large British fund managers, and we've spoken about this in full detail. Meanwhile, the market's appetite for racy tech stocks waned dramatically after the company launched its IPO, with bond yield rises and investors began to rotate out of the sector, which was talked about earlier. Obviously, it's been volatile and people have been moving away from tech stocks at the moment because they think they're highly overpriced. And obviously, like I spoke about it, delivery peers, DoorDash and Delivery Hero both weakened over the past month. They're their competitors. Delivery Hero is very similar, one of the biggest European competitors. And obviously it just talks about it not being profitable, but that's less of an issue for me with this, because I'm not, I'm investing in the companies that I'll see, future trends changing towards these companies. So I'm thinking about, will it make a profit in year 10, year 12, not in the immediate future? How will it build its revenues? It does cost a lot for it to, cost of acquisition of customers costs it a lot at the moment, which I'd like to see that go down. But the big worry is obviously the government get involved with their workers and stuff, and how they structure their workers. So, that really crush the margins, which would make it much more harder for it to become profitable. But with Amazon backing it, I think it's got a clear way of, it will become profitable, and Amazon will help it. It lost 224 million last year in a competitive market, and warned regulators that it had come close to bankruptcy. And I think it's backing from Amazon, and it's just raised 1.5 billion, so it's got money to invest into the company. And obviously the trends are changing towards delivery services, so people at home. And I still think the trends will, people will go out now, but I still think the trends are still going to wane towards people ordering on their phones, because people have realised how easy it is, how functional it is. I never used to really use the Just Eat apps and stuff like that, but now I've started to use them because I just realised how easy they are. And obviously it talks about their timing. It's just all about fund managers not being happy and the timing and stuff like that. So that's a pretty good article on it, really. I've read this article and I thought, I'll have a dip into this stock. So let's hopefully, if I can build a position over the next year in Deliveroo, I can have good returns over the next 5-10 years on Deliveroo, and obviously better nicer into my portfolio. I'd just like to say thanks for watching the video. I've hoped you've enjoyed it. If you could subscribe to the channel, put a thumbs up for this video, give it a like, help the YouTube algorithm get my video out there, sharing my journey forward. It's gone on a bit longer. It's only supposed to be a preview of my portfolio updates, but yeah, I'll be doing a weekly portfolio update on the stocks that I've invested in. I hope you've enjoyed the video. Have a nice week. Till next week.